And good afternoon, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Wednesday, July 21st, 2021. The market continues to follow current analysis pretty cleanly. And I should start to put in some additional labeling. And as we left off yesterday, I had put the intermediate wave 4 correction as complete at the 42.24 low, with the market then launching higher within a intermediate wave 5. And within that intermediate wave 5, there are going to be 5 waves of minor degree, of which minor 1 and minor 2 are labeled as complete. And now we have the third wave, which is subdividing not once, but twice. And first we have 1 of 3, 2 of 3. And then we got today, which produced an additional 1, 2. So it's 1 of 3, 2 of 3, 1 of 3 of 3, 2 of 3 of 3. And now we're into that 3 of 3 of 3 type move. And this is, if you're a follower of Elliott, this is what it's all about, because you're able to figure out what all these little squiggles and downsides, how they fit into the overall rally, which is eventually going to take us to new all-time highs. Because this would seem like it was difficult. And actually, when you were trading it today, it did give that appearance that, boy, is this, as for a 3 of 3 move, is this a difficult thing to pull out of this market? Even though the Dow was just plugging away and the Russell was just plugging away, the NASDAQ sat and fought any upside, kept being sold off, and they buy it and sell it and buy it and sell it. And the same thing basically happened in the NASDAQ, primarily because the largest tech stocks of the NASDAQ are also heavily weighted now within the S&P. But all things come to a conclusion, and we got our move, and that is what this is all about. And so I continue to look for additional upside. Now, where can this wave 3 complete? Well, I'm going to give a very inconclusive but helpful hint by just putting Fibonacci retracements. Actually, that didn't work right. Let me try that again. Let me make sure I'm getting it right. I'm going to do Fibonacci retracements from wave 1 to wave 3. And you can see, oops, this goes there. There you go. You can see the market has already exceeded 1.618 and 1.70. So it's up there. And the next stop would be 200%, where wave 3 is 200% of wave 1, which fits beautifully, I have to tell you. Because wave 3s are normally the longest and the strongest. Well, here we have the evidence of such. And don't forget that this third wave is probably maybe even extend past that. And the reason? Because we're only in 3 of 3. So when this completes a 4 and a 5, then we still got of 3 of 3. We still have a 4 and a 5 to complete the 3. So this is ending up being the perfect blow up for the S&P, because we still have a lot of earnings reports to come out. We're just getting started. And today was a lot of the financial companies. We had Equifax, we had Consumer Credit, we had some of the minor banks, and we still have the bigger banks. We still have Bank of America, we still have Goldman Sachs, et cetera. We've got a lot of people still yet to kind of come in here and tell us what they are or are not doing. So I am expecting additional climb. And as we've already put in via the Fibonacci extensions for the intermediate 5th wave, they're way up there. That would be the minimum for that, 45.07. And we need to first get above 43. All right, it's over here actually, 43.84. So then we'll start breaking to new highs. What's going to be more important is the structure, but you can see now how this structure is really beginning to subdivide, which keeps this third wave alive. If anything, I may have to take back some and say minor 1, minor 2, minor 3, minor 4, 1, 2, 3, 4, 5. We will let the market tell us, but right now I think it's an extension within that third wave. And that's what is building. So again, I'm going to go with what the market tells me. It's not telling me it's getting ready to finish. It's not telling me that at all. They continue to push higher, and we haven't even gotten the bigger companies to start to report yet. And if we have banks starting to report that they're basically putting in a little recovery because they didn't have to put as much in a write-off financially for loans, write down and write-offs as they had to after COVID, well, things could be interpreted as, well, we are getting back to normal, therefore I'm going to step in and I'm buying. And that's okay because we're looking for the blow off. But remember, what I still believe will come is that shock to the markets. What's going to cause it? You can pick a reason, but it's going to be a shock to the market, whether it's coming from the geopolitical situations around the globe, whether it's coming from internally in the economy, whether it's coming from a sudden interest rate rise, whether it's coming from several of the tech companies reporting abysmal earnings, total disappointments. That's always a possibility, but it's going to be a shock to the market. It's going to be something that comes out of the blue and they were not expecting. And that would have to include me. It would be something that I wouldn't be expecting, other than what's going to happen. A sudden drop, I am eventually expecting that. So how it gets there, I don't know. Anyway, for tomorrow, I'm going to continue to look for it. Next resistance is 43.63-ish up in there. And then we move again if it doesn't complete. So I'd be looking for, let's see if I got the 1 of 3, the 2 of 3, 1, 2, 3, 4. This might be finishing 3 of 3 up here now. If it is, look for a small 4-wave correction back down into this area, and then a 5th wave up to complete the 3rd wave, and then an additional 4 and an additional 5. But those are going to be on the minor level, not on the minute level, which is what we're counting right now. And actually within this 3 of 3, it's sub-minute levels. So if I can do this, I got 1, I got 2, I got 3, possibly, and this is a little 4, and now we get a 5. All possible. Let's let the market tell us. Downside should continue to be held and be pretty limited. On an hourly basis, we're still not totally in alignment, although basically we are. We still need the 50 above the 200, and then it's off to the races, I think. At least on an hourly basis, we should get a stronger oomph even on our nearer term, shorter term timeframes. And so I think that pullbacks are going to be limited to moving averages. So first of all, we got the 4, the 8, but those are going to come into play on the way down. But anything of any sustenance would likely be held in terms of a pullback by the hourly 20, the hourly 250. So, and if they start breaking through all of those on the hourly chart, then I'm going to be more concerned that we've already put tops in and what's going on. So shorter pullbacks, stronger upside. Next update, Thursday, the 22nd.